SoFi Technologies stock is down over 65% in 2022. So let's look into its most recent quarter's earnings call to try and figure out what's going on with SoFi Technologies stock. All right, starting off with CEO Anthony Noto, he says that they reported another quarter of adjusted net revenue of 50% year over year. That's clearly a good sign and not news that investors should have been upset about. It was their first full quarter of contribution from SoFi Bank, which they became a bank, which allowed them to surpass $2.7 billion in deposits, which was up 135% quarter over quarter. So a significant increase since they received their charter to become a bank. And also, it was their first quarter of delivering positive GAAP net income of $25 million. So that's great news. Moving along, he says that the lending segment of the business adjusted net revenue grew 46% in the most recent quarter to 250 million, led by continued outperformance in personal loans, which saw record origination levels of nearly 2.5 billion. So lending was fueled by personal loans and other, as we'll see later on in this conference call, there is headwinds to their lending business, but at least on the personal loan front, they're achieving robust growth there. Moving on to financial services, he notes that net revenue grew 78% year over year to 30 million. That was up nearly 30% from 24 million in the first quarter, with the largest contributors being SoFi checking and savings revenue, along with contributed strength from SoFi Credit Card, SoFi Invest, and Lending as a Service. The technology platform net revenue grew 85% year over year to nearly 84 million, with record revenues from its Galileo segment and the first full quarter of contribution from Technices, their other technology segment. So for now, all we're seeing is robust revenue growth here from SoFi Technologies, and we're not really seeing the reason why the stock is down, which I think we will see more so when we go down further. Again, more positive news. They added 450,000 new members in the second quarter, representing their highest quarter of new ads, bringing total members to 4.3 million, which was up 69% year over year. And part of the reason they were able to attract so many new customers and customer deposits to their bank, was because of their industry leading annual percentage yield, which is what the APY stands for, which is the money they give to folks who deposit money in the bank, the savings rate. And so as interest rates have been increasing, more and more people have been looking for savings accounts where that give them a good annual percentage yield on their money to leave their money in the accounts. And SoFi has been offering customers an industry leading rate, and so that's been attracting customer deposits into SoFi. So interestingly, their lending of personal loans has increased even though they maintain strict credit standards and attract borrowers with high incomes and high FICO scores. This is in contrast with upstartstock, which is a fintech stock competitor, which looks to more lower end credit score borrowers and lower income credit borrowers, which could expose them to more risks as the economy enters a slowdown, but not SoFi stock. SoFi looks for higher credit standards, and still, despite looking at higher standards, they're delivering solid growth in their lending business. They're also differentiated from Upstart because the strength of their balance sheet, right? Upstart stock does not have deposits because they don't have the bank charter, and so and one of the reasons why Upstart stock has struggled in recent quarters is because of lack of funding sources, but SoFi has the differentiation in that it gets customer deposits, which it can then use as a funding source to offer these loans. And so it has a better deposit base, a more diversified base of funding, and that's coming to its benefit right now. They note here that they exited the quarter with 2.7 billion in deposits, and the trends improved significantly. To put it into perspective, it took 3 years to accumulate our first billion of deposits and just 3 months to get another 1.6 billion. In addition, approximately 80% of our deposits are from direct deposit. That's huge because every week or every 2 weeks where they get a paycheck or however customers are getting paid, some of that money is coming straight into SoFi on a recurring basis, on an automatic basis, and that's a sticky form of customer deposits. That's good news for SoFi stock and SoFi stock investors. And management notes that SoFi checking and savings provides unmatched value proposition, and through an industry leading APY of 1.8% as of Monday, July 25th. This has probably gone higher since this date because interest rates have gone higher. The Federal Reserve has increased interest rates, and so that's increased the ability for SoFi Technologies to increase the interest rate they offer. And within their SoFi Invest segment, they launched extended hours trading, which means that folks who use this service can trade stocks after the market is closed, which some investors like. And they've initiated margin investing where investors can borrow on top of their, so let's say you have $10,000 in your account, you can actually buy stocks worth more than 10,000 at like 15,000 or 20,000, and this is called a margin loan. And they're going to launch a new proprietary ETF, which is popular among stock market investors. And when they announce this and when they release this, that's going to undoubtedly attract some customers to that service. One of the segments that SoFi management is enthusiastic about is the business to business opportunity, which they estimate to be worth 29 trillion, with 50% of payments still being in paper checks. So our economy still operates 50% of payments through paper checks, which seems like outdated, right? And so just like in consumer banking, we have the capability and the opportunity to convert these paper check payments into digital payments and virtual cards. Management is enthusiastic about this opportunity in front of them. Chris Laponte, in the second quarter, originations grew 9% year over year to $3.2 billion and were driven by record volumes in personal loans, which grew 91% year over year. That's incredible growth. However, I noted earlier that they have some headwinds in student loans and home loan originations, which are down by more than 50% year over year, as they face headwinds from the moratorium on federal student loan payments and higher interest rate payments, which is decreasing demand for consumers to take on a new home mortgage loan. I noted earlier that SoFi Technologies looks for higher quality borrowers, and here they shell out, they extrapolate on just the quality, the high quality of their borrowers. Their personal loan borrowers have a weighted average income of 160,000 with a weighted average FICO score of 748, which is really good. Their student loan borrowers have a weighted average income of 170,000 with a weighted average FICO of 773. So this focus on quality will lead to high credit performance, right? Because higher credit quality borrowers are not going to default on their loans as much as lower credit quality borrowers. That's why they have been rated lower credit quality, because they have a shaky credit history where they may have missed a payment or two. And the lending business for SoFi stock delivered 142 million of contribution profit at a 57% margin, up from $89 million a year ago and 52% margin. So this is what I like to see in a business, especially in a growth business. When their revenue is growing, I want to see their margins expanding. That demonstrates to me there's efficiencies in scale here, economies in scale, and SoFi stock is demonstrating that here in this regard, with margins expanding to 57% from 52% a year ago. And I will close here with my final area where I will discuss their cash balance. And this here will learn some insightful information. The offsetting the company's loan growth, they had a 700 million decrease in cash as a result of funding the bank in the first quarter. So they had to move $700 million from their balance sheet into the bank. The equity used to capitalize the bank was part of cash and cash equivalents shortly after funding the bank at the end of Q1. It has been deployed and is generating a strong return by funding originations. So SoFi stock took the money it had on its balance sheet, put it inside of its bank segment, and it's starting to use that money to originate loans. So it's using its own money to fund these loans, which is going to return an annual percentage rate for the company and generate profits. But at the same time, that was a massive decrease in cash, from a drainage of cash from the company's operations, and it left the company with not so much cash on their balance sheet. They note here that they have only 1.6 billion from their credit limit of over $7 billion. But when you have a credit limit with another bank or another lending facility, that company could all of a sudden say, you know what, we're going to close down this credit facility. And so when you need cash most, you might not be able to access it. And here, just from the big drain in cash, it increased risk a little bit for SoFi Technologies, and could be one reason why the stock price is down meaningfully in 2022, as well as several other macroeconomic headwinds that have caused growth stocks to fall considerably in the year. But if you're more interested in learning about the cash drainage from SoFi Technologies, I have a video that compares the cash shortfall in SoFi stock compared to upstartstock. I will link to that video at the end of this one, so that will elaborate on their cash position compared to their revenue and their debt to equity and all of that. So it'll go into greater detail. So I'll link to that video at the end. But that's the end of this video, this deep dive into SoFi stock earnings call and trying to answer the question, what's going on with SoFi stock? I hope I've illuminated, I hope I've added some insight here. And if I have, please hit the like button and subscribe for further updates like this. And thank you for watching. I'll see you next time. I want to thank the Motley Fool for sponsoring this video. The Motley Fool is a company that provides investing insight and stock recommendations for all investors of all skill sets and risk levels. So I'm proud to partner with the Motley Fool to bring you 10 stock picks from their popular product, Stock Advisor. Stock Advisor has beaten the market by more than 3 times. Go to fool.com/Parkev to get your 10 stock picks now.